Welcome to number 1669 channel. Today, a video will be about Tesla Q4 2025 earnings, which is happening on the 28th of January, tomorrow, 2026, after the market close. So Tesla is actually scheduled to release the physical Q4 2025 earnings on Wednesday, January 28, 2026 after the market close. So in this video, we'll be touching on the key metrics, the short-term so-called trading what will happen, and then also the trading opportunity, and also we'll be reviewing some of the Q3 highlights, especially the guidance. We would appreciate a like and share for this video if you find this video useful and helpful for you. Thank you for your support, and also look forward to your continuing support for our channel. As Tesla will be releasing the physical Q4 2025 earnings on Wednesday, January 28, 2026, after the market close. So we're looking at the sentiment heading into this report, right? It's actually a tale of two Tesla. While the core automotive business is actually facing significant headwinds, which we have the declining deliveries and also margin compression. The next part will be the AI energy narrative is what actually keeps the valuation afloat. So this earnings should be more about the valuation gap and how the valuation gap will be closing up. Now let us have a look at the Tesla Q3 2025 physical summary. So Tesla actually beat the revenue expectation but missed on the earnings, primarily due to the aggressive price cut and also the rising R&D costs in Q3 2025. So the revenue actually came in at $28.1 billion, which was up year on year, and this beat the estimate of a 26.4 billion. So this was actually driven by a record of 497,099 deliveries. So for the non-GAAP EPS, it actually came in at 50 cents. So it was down 30% year on year. This actually missed the analyst consensus of 54 cents. So for the automotive gross margin, right, ex credits, so it actually came in at 15.4%. So while a slight sequential improvement from Q2, we can see a 15% improvement. So it remains significantly lower than the 20% plus margins that investors were actually accustomed to in the years for the past years. So for the energy business, the true standout revenue grew 44% year on year to 3.42 billion, with a record at 12.5 gigawatt and of the storage deployed. So this segment, right, is increasingly acting as a buffer for the automotive slowdown. So free cash flow, right, a record of 4.4 billion actually show that despite lower profits, right, the company cash machine, right, remain extremely efficient. So now coming to the lesson from the guidance provided during the Q3 call was actually more cautious than a visionary. It offers several hard lessons for the investor. So the first one will be the pull forward demand is actually a trap. So the record deliveries in Q3, right, were largely artificial. Tesla has warned that a massive surge in the US sales, right, was actually driven by consumer rushing to buy before the 7,500 federal EV tax credit expire in September. So the lesson that we can take from this is the growth achieved, right, through expiring subsidies isn't sustainable. So this pull forward effect, right, directly explain why the outlook for Q4 2025 and early 2026 is significantly softer. So next we come to the AI pivot is a long game. So Elon Musk doubled down as on the real world AI narrative, focusing on the Cybercat, which is planned for production for Q2 2026 and Optimus Gen 3. So however, the lack of a concrete near-term Model 2 or sub 30K vehicle timeline actually disappoint those that are looking for volume growth. So the lesson that we can take from this, right, is that Tesla is currently trading as a AI company funded by a car company. So investor must be confident with the dead air in the delivery growth while waiting for autonomous software and robotics to hit the bottom line. So the last one will be the scale over price. So management has reiterated that their focus remain on scale and cost cutting. So by stripping down the certain model 3 Y and the trim, so removing some speaker, manual steering adjustment. So they are actually trying to protect the margins. So the lesson that we can learn from this is that Tesla has shifted from being a luxury adjacent brand to a high volume commodity manufacturer. So the premium days are over. So the battle now is about cost per vehicle and software as a service, which is the FSD take rates. So now coming to the key metrics to watch for this physical Q4 2025 earnings for Tesla. So investors would likely focus on these three buckets to determine if the stock's premium valuation is justified. So for I think we will look at the metrics that on the non-GAAP EPS, right? The expected value of the consensus, right, is actually 44 cents to 46 cents. So why does it matter? So it actually implied a 40% year-to-year decline. So anything below 40 cent, right, could trigger a sharp sell-off. So for revenue, the consensus is actually looking at 24.8 billion, expected to be down 3 to 4% year on year, due to the lower delivery volumes, which is 418,227 units. So auto gross margin, we're looking at 14.5% to 15%. So this is excluding credit. This is the floor that the investors are looking for to see if the price cut has really finalized, stabilized. So for the energy storage, right? So we're looking at 14.2 gigawatt. This is a record high. So strong growth here could offset the weakness in the car sales. So now coming to the wildcards, which is the AI and roadmap. So because Tesla currently trades at an elevated forward PE, which is over 200, times in some of the estimates, some analysts estimate. So the financial means, right, might be forgiven if Elon Musk could provide, concrete updates on the robotaxi, cyber cab. Investors want a firm production start date. Currently, rumor for Q2 2026, and progress on the unsupervised FSD in Texas and California. So coming to the next one, the Optimus. So also any timeline for the Gen 3 robot, which is expected in February or March 2026, or a mass production updates. Then for the FSD China Europe, confirmation of regulatory approval for the FSD in China projected for Q1 2026 will be a major so-called potential catalyst. So affordable model, so clarity on the sub 30K platform to combat rising Chinese competition will be the last one that um, should be looking at. So now coming to the short-term trading opportunity that we're looking at for this physical Q4 2025 earnings from Tesla. So Tesla is notoriously volatile post-earning, which option pricing in a move of approximately 6.3% in either direction. So for the bear case, right, which you can do the short or the put opportunity. So if the automotive margins, right, actually dip below 14%, and the 2026 delivery guidance, right, is soft, Morgan Stanley actually expect a 2.5% decline. So the stock could test support at $383. So the removal of the 7,500 EV tax credit in the US is a major shadow over the future demand. So for us, right, we will put the invalidation at below 383. So for then now coming to the bull case, which you can deploy a long or a call opportunity. So if Tesla really beats on margins, showing cost cutting is working, and Musk announced a significant date for the FSD China launch, share could break through the 20 days moving average resistance at $452, which bring us to the bullish bias above $452. So coming to how we can actually do this with an option play. So the strander play. So given the binary nature of the Tesla earnings, right? Either a AI moonshot or a slowing car company. So some trader use a long strander to profit from a large move regardless of direction. So though the high IV crush, right, which is the implied volatility drop after the calls make this risky. So we may want to do this. We have a so-called a historical win rate if you were to use the long strander at 75%. So this is the so-called the price that we might want to look at, and then the edge is around 72%. So this is one of the things that I might look at to deploy. So you may stay tuned for the how I'm going to do the long sender maybe today or maybe after the earnings. on the 28th itself. So a bit of the risk management framework. So these are the three things that we should always keep in mind. So trade levels, not the opinion, and we should define the invalidation before we entry, and then also reduce size during the consolidation. Do practice discipline and patience with. So this video is actually for educational content only, and it's not financial advice. So the disclaimer, so the analysis and the result, right, as you presented, does not recommend or suggest any investings in the state stock. So this is purely for analysis purposes.